What is the primary purpose of underwriting in insurance and financial services? A. To increase marketing effectiveness. B. To eliminate claims and losses completely. C. To assess and manage risks associated with financial decisions. D. To automate all investment processes. The correct answer is C. To assess and manage risks associated with financial decisions. Explanation. The core purpose of underwriting is to evaluate the risk of insuring or investing in a particular individual, organization, or asset. Underwriters use data to determine whether the risk is acceptable and how to price it properly. In insurance, for example, underwriting ensures the insurer can cover claims while remaining financially stable. In finance, it ensures that investments or loans are only made to those who are creditworthy or have strong prospects. What historical event is most commonly associated with the origin of underwriting? A. The Great Depression. B. The establishment of the New York Stock Exchange. C. Marine insurance practices at Lloyd's Coffee House in London. D. The 2008 financial crisis. The correct answer is C. Marine insurance practices at Lloyd's Coffee House in London. Explanation. Underwriting traces back to the 17th century at Lloyd's Coffee House in London, where shipowners and merchants met to insure ships and cargo. Individuals would write their names under the risk information on document and take on portion of the risk in exchange for premium. Thus the term underwriting. This practice laid the foundation for modern insurance and financial underwriting. In life insurance underwriting, what is the most important factor in evaluating an applicant's risk level? A. Number of dependents. B. Occupation and hobbies. C. Premium payment frequency. D. Age and medical history. The correct answer is D. Age and medical history. Explanation. In life insurance underwriting, the age and medical history of the applicant are key risk factors. These provide insights into the applicant's life expectancy and the probability of claim being made. Underwriters also review lifestyle, family medical history, and current health status to determine insurability and the appropriate premium. Which type of underwriting involves assessing the creditworthiness of a borrower before approving a loan or mortgage? A. Insurance underwriting. B. Investment underwriting. C. Securities underwriting. D. Loan or mortgage underwriting. The correct answer is D. Loan and mortgage underwriting. Explanation. Loan and mortgage underwriting is the process of evaluating an applicant's credit profile, income, assets, and liabilities to determine their ability to repay loan. This form of underwriting helps financial institutions avoid lending to individuals with high default risk and ensures regulatory compliance and financial soundness. What is the role of a securities underwriter in the investment process? A. Representing policyholders during claims. B. Approving personal loan applications. C. Distributing and pricing new securities in capital markets. D. Managing retirement portfolios. The correct answer is C. Distributing and pricing new securities in capital markets. Explanation. A securities underwriter facilitates the issuance of stocks and bonds in the capital markets. They help companies raise capital by determining a fair offering price, buying the securities from the issuer and reselling them to investors. This role is critical for ensuring liquidity, market stability, and investor confidence during initial public offerings and bond issues. During the underwriting process, what does risk assessment primarily involve? A. Calculating marketing expenses. B. Estimating company profits. C. Evaluating the likelihood and impact of a loss. D. Setting up automatic payment plans. The correct answer is C. Evaluating the likelihood and impact of a loss. Explanation. Risk assessment is the evaluation phase where underwriters analyze available data to estimate the probability and potential severity of a claim or default. This helps determine whether the risk is acceptable and guides decisions on coverage, loan approval, or investment underwriting. Tools include actuarial data, financial ratios, and credit scoring models. Which of the following best describes the ethical principle of fairness in underwriting? A. Offering higher premiums to all applicants in high-risk areas without consideration of their individual risk factors. B. Ensuring all applicants are assessed consistently based on objective underwriting guidelines. C. Providing discounts to applicants who know the underwriter personally. D. Denying coverage based on non-risk-related personal characteristics such as ethnicity or religion. The correct answer is B. Ensuring all applicants are assessed consistently based on objective underwriting guidelines. Explanation. Fairness in underwriting means applying consistent and objective criteria to all applicants. Underwriters must avoid personal biases and discrimination based on irrelevant factors. Each application should be evaluated based on valid risk factors and underwriting guidelines to ensure equitable treatment. A conflict of interest may occur in underwriting when A. An underwriter follows company underwriting guidelines. B. An underwriter offers a premium discount for good driving history. C. An underwriter assesses a policy application for a family member. D. An underwriter refers a client to an independent broker. The correct answer is C. An underwriter assesses a policy application for a family member. Explanation. A conflict of interest arises when an underwriter's personal relationship with an applicant could influence or appear to influence their decision-making. Evaluating a policy for a family member can compromise objectivity and create ethical concerns, and is generally discouraged unless procedures are in place to mitigate the conflict. Which of the following is a key goal of reinsurance in underwriting? A. Increasing premiums for high-risk clients. B. Spreading risk to protect the insurer from large losses. C. Eliminating the need for risk assessment. D. Reducing the number of policies underwritten. The correct answer is B. Spreading risk to protect the insurer from large losses. Explanation. Reinsurance enables an insurer to share its risk with another entity, reducing potential exposure to large losses. This is particularly important in catastrophic events and helps maintain insurer solvency and underwriting capacity. What type of reinsurance involves the reinsurer covering losses that exceed a certain amount on a single risk or policy? A. Stop-loss reinsurance. B. Facultative reinsurance. C. Proportional reinsurance. D. Excessive loss reinsurance. The correct answer is D. Excessive loss reinsurance. Explanation. Excessive loss reinsurance is a form of non-proportional reinsurance where the reinsurer only pays for losses that exceed a set limit. It's commonly used to protect against large infrequent claims like natural disasters or high-severity liability claims. In life insurance underwriting, which of the following is typically considered during the risk assessment process? A. Credit score. B. Occupation and travel habits. C. Homeownership. D. Employment history. The correct answer is B. Occupation and travel habits. Explanation. In life underwriting, occupation and travel habits are significant risk factors. Dangerous jobs or frequent travel to high-risk areas increase mortality risk, prompting underwriters to adjust premiums or impose exclusions accordingly. How does underwriting differ between personal and commercial insurance? A. Commercial underwriting involves assessing more complex risks. B. There is no difference between personal and commercial underwriting. C. Personal insurance underwriting considers company financial statements. D. Commercial underwriting always takes less time. The correct answer is A. Commercial underwriting involves assessing more complex risks. Explanation. Commercial underwriting requires evaluating a business's operations, financial condition, legal exposures, and more. This contrasts with personal insurance, which focuses on simpler risks like individual auto or home policies. What is the role of ESG, environmental, social, and governance risk assessment in underwriting? A. Evaluating a company's sustainability and ethical practices. B. Determining the client's age and health status. C. Assessing an applicant's driving record. D. Estimating property reconstruction costs. The correct answer is A. Evaluating a company's sustainability and ethical practices. Explanation. ESG underwriting focuses on how businesses' operations align with environmental, social, and governance standards. Companies with poor ESG performance may face higher regulatory or reputational risk, which underwriters now increasingly factor into coverage decisions. What best describes the use of big data in modern underwriting practices? A. Using social media exclusively to assess risk. B. Analyzing large and diverse datasets to refine risk predictions. C. Ignoring traditional actuarial techniques. D. Making underwriting decisions without client consent. The correct answer is B. Analyzing large and diverse datasets to refine risk predictions. Explanation. Big data empowers underwriters to use vast amounts of structured and unstructured data to improve risk models, personalize premiums, and detect fraud. It's a core part of modern, tech-enhanced underwriting strategies. Which of the following is a common underwriting consideration in cyber insurance? A. Weather-related claims history. B. Number of physical offices. C. Strength of its security protocols. D. Age of the insured's employees. The correct answer is C. Strength of its security protocols explanation. For cyber insurance, underwriters assess the robustness of an organization's cybersecurity measures, firewalls, encryption, employee training, etc., as these directly impact the likelihood of data breach or ransomware event. Behavioral economics in underwriting helps insurers to A. Eliminate manual underwriting roles, B. Understand how clients make decisions under risk, C. Predict market interest rates, D. Replace actuarial tables entirely. The correct answer is B. Understand how clients make decisions under risk explanation. Behavioral economics helps insurers gain insight into human decision-making. It acknowledges that clients don't always behave rationally, and this can be useful in designing underwriting questions, products, and communication strategies that lead to better risk selection. Which of the following best describes the outcome options of the underwriting decision-making process? A. Accept, reject, invest. B. Decline, cancel, refer. C. Accept, modify, or decline. D. Approve, file, or archive. The correct answer is C. Accept, modify, or decline explanation. Underwriters make one of three decisions: accept the application as is, modify the terms, e.g., charge a higher premium or request additional information, decline the application entirely if the risk is too high. This triage ensures risk is appropriately managed and aligned with the organization's risk appetite and policies. In property and casualty insurance underwriting, which of the following is most likely to be a key consideration? A. Applicant's credit score only. B. Marital status of the applicant. C. Condition, location, and use of the insured property. D. Income tax returned for the past 3 years. The correct answer is C. Condition, location, and use of the insured property explanation. For property and casualty insurance, underwriters focus on the physical characteristics and usage of the property being insured. This includes its age, condition, safety features, location, e.g., flood or earthquake zones, and occupancy type, residential versus commercial, all of which affect the risk of loss or damage. What does pricing the risk refer to in the underwriting process? A. Determining the cost of underwriting staff. B. Setting the appropriate premium or interest rate based on the risk level. C. Calculating brokerage commissions. D. Assigning monetary penalties for late applications. The correct answer is B. Setting the appropriate premium or interest rate based on the risk level explanation. Pricing the risk involves determining how much to charge for taking on a particular risk, typically in the form of a premium in insurance or interest rate in lending. The pricing reflects the likelihood and potential cost of a claim or loss and must be competitive while also covering expenses and ensuring profitability. Which document typically initiates the underwriting process in insurance or lending? A. Risk profile. B. Claim form. C. Application form. D. Premium invoice. The correct answer is C. Application form explanation. The application form provides the initial information required to begin the underwriting process. It includes personal details, financial data, medical history, or property information, depending on the type of underwriting. This form is the foundation for collecting, assessing, and verifying risk-related information. Which of the following applicants would most likely fall under the preferred risk classification? A. Smoker with history of high blood pressure. B. An applicant with an irregular income and poor credit history. C. Healthy non-smoker with no family history of illness. D. Cancer survivor in remission for 2 years. The correct answer is C. A healthy non-smoker with no family history of illness explanation. Preferred risk applicants are those who represent a lower than average risk to the insurer. These individuals are typically in excellent health with no tobacco use, no family history of serious illnesses, and favorable lifestyle habits. They may be eligible for lower premiums. Applicants with health issues or risky behaviors fall into standard or substandard categories. What is the main purpose of underwriting guidelines and manuals? A. To dictate legal consequences for non-disclosure. B. To ensure uniform decision-making by underwriters. C. To limit access to high-value policies. D. To promote insurance sales through advertising. The correct answer is B. To ensure uniform decision-making by underwriters. Explanation. Underwriting guidelines and manuals provide standardized procedures, checklists, and criteria that help underwriters evaluate risk consistently. These resources help insurers maintain equitable decision-making, manage exposures effectively, and comply with internal policies and external regulations. Which of the following best describes Moral hazard. A. The inability to identify a customer's financial status. B. The risk posed by applicants who intentionally misrepresent facts to gain insurance. C. The increase in premium due to aging. D. Classification for standard risk applicants. The correct answer is B. The risk posed by applicants who intentionally misrepresent facts to gain insurance. Explanation. Moral hazard refers to the increased risk of loss resulting from the policyholder's behavior. This can occur when the insured engages in riskier actions or provides false information during the application process, knowing they are protected by insurance. Identifying moral hazards is critical to fair and accurate underwriting. Adverse selection occurs when A. Insurance companies offer the same premiums to all applicants. B. Healthier individuals choose not to buy insurance. C. Insurers underwrite based on predictive analytics. D. All applicants are automatically classified as substandard. The correct answer is B. Healthier individuals choose not to buy insurance. Explanation. Adverse selection happens when individuals who are more likely to make a claim, e.g., those in poor health, are more inclined to apply for insurance, while healthier individuals opt out. This imbalance increases the insurer's risk pool and can lead to higher claims, which makes proper risk selection vital. How does predictive analytics support the underwriting process? A. By monitoring real-time health data from wearable devices. B. By guessing the future mortality rates without data. C. By removing the need for medical underwriting. D. By analyzing large data sets to predict future risk behavior. The correct answer is D. By analyzing large data sets to predict future risk behavior. Explanation. Predictive analytics uses historical data, machine learning, and statistical modeling to assess the likelihood of future events, such as a claim. This tool helps underwriters make more accurate risk assessments and improve decision-making, especially in complex or high-volume environments. Which regulatory body in Canada is responsible for overseeing federally regulated insurance companies? A. FINTRAC. B. OSFI. C. RAE. FRA. The correct answer is B. OSFI. Explanation. The Office of the Superintendent of Financial Institutions (OSFI) supervises and regulates all federally registered banks and insurance companies in Canada. OSFI ensures these institutions remain financially sound and comply with regulatory requirements, protecting policyholders and promoting public confidence. What is the key objective of Know Your Customer (KIC) regulations in underwriting? A. To calculate the net premium of policy. B. To verify the applicant's personal and financial identity. C. To evaluate claims more effectively. D. To collect marketing data for cross-selling insurance. The correct answer is B. To verify the applicant's personal and financial identity. Explanation. KIC regulations require financial institutions and insurers to verify the identity, financial status, and intent of their clients. This process is designed to prevent money laundering, fraud, and terrorism financing. It's a critical compliance measure under anti-money laundering laws. Why are medical reports important in life and health insurance underwriting? A. They reduce the cost of premiums for the insurer. B. They help the insurer offer policies without a medical exam. C. They provide objective evidence about the applicant's health status. D. They speed up the claims process. The correct answer is C. They provide objective evidence about the applicant's health status. Explanation. Medical reports from physicians or paramedical examiners give underwriters essential health data such as blood pressure, cholesterol levels, pre-existing conditions, and other risk indicators. This allows for accurate classification into standard, preferred, or substandard categories. How does the use of credit reports in underwriting help insurers? A. It guarantees higher policy sales. B. It ensures accurate tax calculations. C. It indicates financial responsibility and potential risk behavior. D. It replaces the need for income verification. The correct answer is C. It indicates financial responsibility and potential risk behavior. Explanation. Credit reports offer insights into the financial stability and behavior of the applicant. Poor credit may suggest higher risk-taking behavior or financial irresponsibility, which could correlate with higher insurance claims. While not used in all markets, it is a supplementary tool in risk assessment. Under Canada's privacy laws, what is key requirement for insurers when collecting client information? A. Sharing it with third-party advertisers. B. Selling it to analytics companies. C. Obtaining consent and using it only for specified purposes. D. Keeping records indefinitely. The correct answer is C. Obtaining consent and using it only for specified purposes. Explanation. Under the Personal Information Protection and Electronic Documents Act, PIPED, and similar provincial laws, insurers must collect personal information lawfully with the client's consent and use it only for the purposes disclosed. Confidentiality and privacy are core to ethical underwriting practices.